fundsupermart.com.
Hi, what is your outlook for 2014 for both equities and fixed income, and how is the fund positioned to capture returns in this environment?
We would say that we still prefer equities over fixed income. Now, we've been cautious to try to manage investor expectations as it regards equities. They probably shouldn't expect 20 to 30% returns as we enjoyed in 2013. However, when we compare where valuations are for stocks versus bonds as asset classes around the world, almost uniformly in each market that we look at, we prefer to own equities over fixed income.
Were there any material changes in the fund's portfolio prior to and after the Federal Reserve's announcement of reduced stimulus on 18 December 2013?
Not any material changes. For virtually all of 2013, our asset allocation remained relatively stable. And as we now head into 2014, we really haven't made any substantial changes in terms of positioning, either in terms of stocks, bonds, cash, or in terms of global sectors. The reason why we haven't done so is we believe that the Fed's communication going forward about keeping short rates low for long is going to be as material as any changes to bond purchases. The other thing that makes us a little bit more comfortable, despite the tapering that will be occurring, is that we anticipate that growth is going to start to accelerate in the U.S. We think GDP for 2014 is likely to be higher than it was in 2013 and 2012, and to some degree that hopefully will offset some of the volatility that was otherwise expected to come from a tapering.
With investor sentiment gravitating towards equities once again, due in part to diminishing prospects of fixed income returns, what is the investment merit of a balanced fund like the BlackRock Global Allocation Fund?
I think the long-term investment merit is the fact that since we launched the fund back in 1997, on a cumulative basis, global allocation has outperformed virtually all global equity indices and most individual regional indices. It's also outperformed virtually all fixed income indices as well over that time period. So the value proposition to end clients, it's been a great alpha generator. And for those clients who may have been underinvested the last 4 years as global stock markets have rallied and want to re-enter equities, by doing so with global allocation, it will get them equity exposure, but not a beta or a volatility that's as high as most global equity indices. So for long-term investors, they view it as a great core holding. I would agree with them. It's typically diversified in over 700 different holdings, 40 different countries, and 30 different currencies around the world. And because we tend to make changes slowly in the portfolio, it won't disturb a client's overall asset allocation.
Thank you.